Good afternoon. Thank you once again for joining me. Julian Campbell here. We've got another interesting show lined up for you this week. Right now, we're going to have a chat with Steve Markey from Markey Insurance about underinsurance. Good afternoon, Steve.
Afternoon, Julian.
Thank you for joining us again. Insuring your business is a complex process, and as I understand, underinsurance is one of the biggest issues in the insurance industry today and its long history. Can you tell us why this is the case?
Yeah, sure. Thanks, Julian. This is a major issue, and I've had a late change on today's subject, and I've done this out of sheer frustration and what we've been dealing with as insurance brokers following the recent April 2015 storms. So basically, the message I want to try and get to everybody is if you underinsure your stock or your contents, your plant and machinery, your business interruption or gross profit, whatever you want to call it, and you have a loss, you are going to go through a whole world of pain. There's no two ways about it.
Okay, so you sound very passionate about this subject, and particularly as you had one this morning. Tell us what a business person needs to do to avoid this pain.
Okay, well, there's a lot, however, and there's not enough time to go through it in its entirety, but we need to know this. The key thing to remember is you must set your insurance limits or sums insured on your policy for any property, and you've got to set it at replacement value. Okay, so for businesses that can claim 100% input tax credits, you exclude the GST component in that replacement value. This does not mean what you paid for it or when you or what you think you'd be happy with following a total loss. So the best way to talk about is by example. For buildings, you've got to insure for what it'll cost to demolish the building. So remember that, demolish the building and remove all the debris and rubbish that comes out of it. You've got to redesign the building, and you've got professional fees here. Then you've got to rebuild the building to a state it was in before you suffered the loss. And plus there's other additional costs that may apply due to upgrading the property to comply with current regulations. So that can be having to put in bigger car parks or other fencing or other fire stuff. So it does cost a lot of money. So it's more than just to rebuild the building. And on contents, the same applies. So fit-outs, machinery and computers, they need to be replacements. So
I know we're talking business, but I suppose the same thing does apply to the personal side of things, the houses and the contents of houses, doesn't it?
Well, it's a good question, that one, and it is slightly different. A lot of the householders' policies do not have what they call an underinsurance clause in it.
Okay.
So there's little. I'm going to talk about the penalties you suffer a bit later, but the householders' ones quite often are
not so bad.
They're not so bad, but if you buy a cheap one, then they might still be in there. So you've got to be very careful.
Okay, so you mentioned business interruption insurance as well. How do people underinsure here?
Oh, this is the most frustrating part of all. If your policy insures gross profit, which is basically a cover which is designed to keep the business going following a major loss or repair, then you've got to tell your broker what your real gross profit is. So if you don't know what your gross profit is, then you need to basically insure for, if you're a manufacturer, it could be the turnover less what the purchases are, because you're not operating, but you still want to pay your wages, you still got financial commitments, and you still want to pay, you still want to make a profit, of course. This figure is most neglected, and people fail to keep this figure up to date, mainly because they do not want to pay any more, Julian, which I can kind of understand. However, it's a waste of money in the end. If you don't do it properly, it's sometimes not worth doing.
So why do you say it's a waste of money and so important to ensure that you're not underinsured?
Well, to begin with, stating the bleeding obvious, if you don't insure for what your goods are worth, then you're going to end up with less. That's a black and white equation. But just as importantly, and this is the big one, this is why I'm talking on this big subject today. If you do not insure correctly, the insurance companies will penalise you. That's a big message. You don't insure properly, you will be penalised. And the insurance companies quite likely reduce your claim payment even more. Like, this is what Australians refer to as the whip in the tail. And it's a perfect way to describe what the penalties are.
Well, so just take us through what does happen.
Okay, it's best explained by a simple example. So if you own a building, Julian, and you suffer a major loss from fire, then we have to go, the insurance company comes in, then we have to go and try and put it back to how it was. So let's say it costs $500,000 to remove the rubbish, rebuild a similar building and comply with the council regulations. So $500,000 to do that, that's what it's going to be. But you insured it for $250,000 5 years ago because that's what you paid for it, which we hear that a lot, by the way. That's got nothing to do with it, how much you paid for it. It's how much it's going to cost to replace it. So this means, in a very basic sense, you're underinsured by 50%. Does that make sense?
Yep.
So how much do you think that the insurance company's going to pay you for the rebuild?
Well, I've paid a premium on $250,000, so that's what I should get.
Yeah, and that kind of makes logical sense. However, as you're only insured for $250,000 and therefore underinsured by 50%, the insurer will only pay at most around $156,000, which is just over the 50% mark. So even though you paid your $250,000, you are not going to get it. So many policies out there only require you to be within 80% of the replacement value. So you get a little bit of a leeway there, and that's why I'm saying there that you get a little bit more than 50%, but it still hurts.
So do these same rules apply to your insurable gross profit?
They do, yep. And this is where we see most underinsurance issues, more than in the property. So you cannot underinsure your gross profit either.
And I suppose one of the issues with gross profit is that a lot of businesses, unfortunately I still see out there, don't do their bookkeeping very quickly, and therefore they really don't know what their gross profit currently is.
That's right, yeah, a lot of people don't. And then a lot of people look at it as an accounting gross profit, and that's another big subject. We're actually talking about an insurable gross profit, which is slightly different and takes in more into account. So yeah, there's discussions business people need to have with a broker that knows what they're talking about to set the right sum insured. So
is there anything else I should watch for before we finish?
Oh, there's always something to watch for. And your broker can tell you more on this, but removal of debris, so just banging on about this removal of debris. Don't underestimate how much it costs to get rid of waste and like demolished goods, especially if you have any asbestos or even think you might have some asbestos in roofing or in your building. And anything that's either toxic or could become toxic if it's exposed to fire or water, the costs to remove that kind of stuff are enormous because you can't just go and dump it in a normal dump. So yeah, you've got to really watch how much it's going to cost to remove debris.
Can I have another passionate subject next time?
Yes, we could. We could talk about that even more. Next time we talk, I'm thinking we may discuss a very, very touchy subject in our industry, and that's how government taxes on the insurance. Everybody pays, you know. Everyone thinks the insurance company get all that money you pay them, but they really only get about half.
Okay. So. Sounds interesting. Well, have a great week, and we'll have a chat with you in a couple of weeks.
Thanks, Julian.
Thanks, Steve. Bye-bye.
Bye.
Steve Markey there, helping us to understand the vital thing of making sure you're not underinsured.